Welcome back. So, if you haven't started investing before, you can feel free to use the same broker I use if you're from the UK. So, I use Trading 212. There should be a free referral in the description. So, check that out and we'll both receive a free share. And there's also my dividend tracker spreadsheet that I've created. So, you're welcome to check that out. I have a tutorial on my channel. Anyway, let's get started. So, thankfully, I've no longer got COVID, so back to normal. So, Carnival is the company we're going to be looking at today. This one is dual listed on both the UK and US stock exchange. So, if you're from the UK, I definitely recommend go for the CCL in the UK. So, if and when they restore the dividend, you're not going to have to pay that 15% tax that you would if you got the US one. So a little bit about this company. So it's called Carnival Cruises. It's not the biggest cruise company in terms of market cap. That will be Royal Caribbean Cruises, but this one is the biggest in terms of revenue. So it's currently based in Florida. So back in 2019, that was like at the very beginning of the pandemic, the stock fell 75%. So from 1st of January to 2020 in March. So the dividends were also suspended due to COVID. Debt in 2019 was 11.5 billion. This increased to the peak at 34.5 billion in 2022. So they weren't able to continue their operations. They had to kind of take out high interest loan to survive. And they were struggling, and many people were predicting it would go bankrupt, but they managed to survive through it. So far, they've paid off 5.2 billion of the debt they accumulated. So it's going okay so far. And the final dividend that they did pay was 50 pence. I think that was in March 2020. So they've been surviving on the remaining cash reserves and the high interest debt that they took out. A little bit of the metrics. So their revenue, as you can see, like 2019 and back, it was pretty consistent. It was a small increase. And then 2020 took a huge dip, and 21 just got worse. So they tried to restart operations. It was pretty difficult. And at the time of this video, they're at record revenue. So they had revenue of 5.75 billion in the quarter ending May 31st, 2024. So that's a 17.72% growth. So for the last trailing 12 months, the revenue's been 23.44 billion. So that's been up 34% year on year. So in the year ending November 30th, 2023, they had record revenue of 21.59 billion. That's a 77% growth. So revenue is also back to all-time highs. So in the last trailing 12 months, as I mentioned, it's been 23.44. So taking a quick look, you can see here. So revenue 21.59. And also taking a look at occupancy. So they've actually got record occupants too. So they've had 100% occupancy rates and people booking way in advance. So people are booking not just for the current year, but going onwards. The long-term debt is also reducing by huge margins as well. 14.93 decline year on year. So that's good progress. It's still going to take a while to get to where they need to be, but they're making a change to it. Their long-term debt, as you can see, huge increase, as I mentioned, during the pandemic. In 2020, just kept going up. 2022 was the worst, and it's been slowly decreasing since. So they addressed the issue by trying to use their cash reserves, and then when they had to, they took out a high interest loan. So far it's positive signs, and it's likely that they're going to get more favorable interest rates going forward too. So they've been nicely paying it back. So nearly $34.7 billion in 2020. The long-term debt is expected to be paid down in the next 5 years. So they're doing a lot quicker than estimates expect, but not anytime soon. So it's not very likely this company is going to be having a dividend yet. So their competitor, their main one, is Royal Caribbean Cruises. So as of June 2024, they have a fleet of Carnival Cruises have 27 ships. 2 ships are going to join P&O Cruises Australia in 2025, as well as 5 new ships, 2027, 28, 29, 31, and 33. So as of August 2024, Royal Caribbean has 28 ships. They're planning to build 4 more, and 2 ships were planned, but no date for the launch is yet to be announced. So overall, Carnival should have a lot more ships in operation. So in terms of metrics and the analyst rating, so it's trading at a modest 15 times forward earnings. So in the first quarter, 56 hedge funds had positions in the company of 1.5 billion, indicating like strong investor confidence in the company. Financial analysts have shown optimism, with Argos raising the price target from 25 to 20 to 25, following strong earnings in the Q1. JP Morgan did something similar, so they rose the price target from 23 to 25, noting a huge demand in cruises with no signs of slowdown so far. So overall, they have a strong buy signal. And it's so 18 analysts were looking at the company. So the lowest prediction they've had is $16.5, which is pretty. I don't see them returning to this level. The highest prediction so far has been $28, but they keep revising this figure, so it may go even higher. They haven't had to dilute their shares they generally didn't. It was decreasing over time until they had that issue with the pandemic. So for this, I think it's okay. They're reducing this as much as they can, but first the focus is the debt. So in the future, there's going to be some huge changes to the company. So there's expected to be a 10.25 increase in net yields compared to 2023, so an adjusted net income of 1.55 billion. There's also a possibility of them restoring the dividend, but I don't see that happening for the next 4 to 5 years at least. They're expected to bring in record revenue as well, 30 billion in 2024. 37 billion in 2027 is the predicted earnings. And so far, there's an expected 100% upside to this company. So post-COVID, I think it's realistically can go up to $50 from here. And one of the modes of this is also they have a huge barrier to entry for competitors to come. So other companies can't just come. Disney's planning to invest more in their own cruise line, but scaling this takes time. And by that time, Carnival will also have increased the amount of fleets they have too. So Disney recognizes the demand here. And taking a look, so unprecedented demand for the company. So the bookings, according to the second quarter earnings presentation, Carnival is expecting to have the next year filled up and people booking way in advance to make things. And their first ship in 14 years, it's called the Cunard. That's going to be launching very soon. And also they're heavily investing in the company, so they're trying to increase the amount of places they can earn money. So one of them is offering Starlink, so they have free Wi-Fi on board, and they can try and charge more things there too. So in summary, they've kind of shown huge resilience, huge increases in revenue, positive trajectory, lowering the debt. They're really positioned for growth, especially with their investment in new fleets. But there are some challenges. So one is the huge debt that's still there with a rising cost of revenue. So they need to continue to sustain momentum, focus on free cash flow, optimize the balance sheets, try and offer more avenues of revenue for the company. So possibly increase the price of tickets. But so far, demand is unprecedented and it looks like it's set to keep going. So I'm pretty bullish on this company. I have a small investment in them. I'm probably gonna keep adding to them for the moment. I think they'll have a small dip, but so far they're doing pretty good. So anyway, thanks for watching the video. I'm gonna end it here. So if you have any questions, you can leave it in the comments, or if you enjoyed the video, I'd appreciate like a like or a comment. That'd be great. And as I mentioned, there's the broker I use, which is Trading 212, should be in the description. So feel free to check this out.